Welcome back. Hope you're having a good morning. Well, we've listed on all the top stocks you need to track. Let's get in Prakash Diwan to help us out with some fundamental analysis. Hi, Prakash. Good morning. Top of mind, Asian Paints. Stock down 10% in the last 1 month or so. It seems someone was sniffing a weak set of numbers. But the numbers are indeed very, very disappointing. Large miss in comparison to estimates. Though they're guiding for better second half of the year. The con call as well will give us further details. But what's your view on the stock? If it opens down, then what do you do?
Good morning, Nigel. No, so I definitely believe this is a howler of number. While we knew that the competitive intensity was impacting the company's earnings potential, this has come as definitely a little bit of an unpleasant surprise. But the reasons that we attribute this to in terms of the extended monsoon, delay in that consumption pickup, could well be the opportunity that things could probably improve going forward. Now, whether that happens immediately in the next 2 quarters or it takes much longer will, of course, depend on how confident the management is. And I'm looking forward to listening to them in some time on your channel. But very clearly, this is where I think it bottoms out. We knew that competitive intensity was impacting it. Opus has done what it wanted to, it had to do. So probably now you may not have negative surprises. And remember, margins will probably not be as impacted going ahead, given the softness in crude, given the softness in other raw material inputs that they have. So my sense is that they'll probably be able to get out of this in some time. For long-term investors who like the business model, probably a good opportunity to buy. I know it's a contrarian call. Everybody's been talking about downgrades and all. But even after the downgrades, it's not something which is going to be earth-shattering. I mean, at 2,700 plus, it's not something that we are really staring at in terms of a potential loss. So the risk reward does get favorable, but if you are willing to hold on for the long term.
Target prices set by brokerages are much lower. So JP Morgan today has downgraded it to an underperform. Their target price is 2,400. For Jefferies, the target price is all the way down to 2,100. And one more problem for Asian Paints versus peers who managed to report a small volume growth of about 4% odd is Asian Paints has a higher dependence on urban India, where the consumption slowdown has been a little more pronounced.
Let's go back and take some questions with Prakash. Prakash Diwan, of course, has been in conversation with us. Morning to you, Prakash, from my end. Tata Motors, I think this is a nice debate, right? Numbers are nothing great, huge margin compression, worse second quarter. But look how optimistic they're sounding. On the India business and on JLR, they haven't cut back their guidance. They're still saying they're on track with the debt reduction program. So then, buy, sell, hold, avoid, what is it? You're on mute, Prakash.
My apologies. So I said good morning, Surbhi, but exactly last year, it was the management that was trying to caution all of us when the stock was at about closer to its highs of 1,100. And that's panned out. Now, if they're as confident to complete the full FY25 with the guidance that they had earlier alluded to, I don't see any reason why the stock cannot make a comeback. And secondly, I think their confidence stems from two things. One is the balance sheet structural change that they're talking about being net debt zero. So that's going to be a very, very major thing that takes away all the potential shocks that they could get from any kind of a setback. The second thing is that the EV portfolio that they have, they're talking about revamping that and focusing much more on that. They're already leaders. Of course, EVs haven't done so well within the domestic market, but I think there's another plan afoot to demerge the commercial vehicle business, which probably is a bit of a drag at this point in time when you buy the stock. So if those changes are afoot, I don't see any reason why the stock can't make a comeback. Of course, not go back to 1,100 as quickly, but at least from these 800 levels, another 20% upside could definitely be penciled in. So I'm quite positive on this, given on the back of the management commentary and the environment in which we are in terms of the auto sales and auto sales pickup and things like that. So pretty interesting. But then you have options like M&M and Maruti, to choose from. So it becomes a little bit of a tougher choice. But on a standalone basis, Tata Motors is definitely a buy. It doesn't make sense to sell it at this level. People could choose to hold, but as I said, if you're willing to ride that turnaround, then definitely you get that 20-25% upside.
Prakash, you're in a full stock buying mood today. You're going to buy the dip on Asian Paints. You believed it's bottomed out. Tata Motors also, no hole, go out there and buy. So,
Yes.
someone's out there with cash sitting to, buy things.
And it also helps, right? Because prices have come off. Tata Motors are 30% off,
30%
and
off
Asian
from
Paints
it.
itself is well off the peak. So I guess that makes the buying decisions a little easier.
Okay. So, Prakash, what else, right? We had so many companies which reported numbers over the weekend. Which one is your pick of the lot?
So Rima, when I say, these are viable names, it's primarily, especially Asian Paint seems like a very big contra bet. The reason I say is on a quarterly basis, it has a profit pool of 8,000 crores, which is actually more than all other paint companies put together, whether it's Kansai, Akzo, the smaller ones like Shalimar and, your Indigo and all of that. So you can't get these stocks. So good news and good prices don't come together anyway. So that's where my thesis is. On other numbers, if you look at a small company like Sami Hotels, it's too small. We don't see it being discussed so often. It just had a little bit of a recent history post the IPO. But that space is looking so promising. We saw the numbers from Indian Hotels, right? They were so impressive. And what's happening is going forward, the number of keys that are getting added in the market that's going to take a long time. It's not so easy to meet the demand. And the demand gives them the pricing power, which only starts improving the asset sweating. So from that perspective, it's a very small unit, is efficiently run. The numbers are impressive. And Sami Hotels is something which you could probably see becoming much bigger over the next few years. And I think you'll have to look at these slightly under-discovered names to make money going forward. I'm not necessarily saying large caps, but within the mid-small caps, there is enough potential salience that you could start filtering out.
Okay, so for Sami Hotels, the numbers were out over the weekend. A revenue growth of 20%, margin expansion to 34% versus 23%, and the company has clocked in a profit of 12.6 crore versus a loss of 88 crore in the comparable quarter of last year. So turnaround for Sami Hotels, and that is Prakash's pick for the day. Prakash, thank you very much for joining in.